Good morning. Myself, Abhishek Justin. Today, I'm going to do a presentation about business analytics and intelligence. First, we are going to see about the introduction. In this video presentation, the viewpoint of a business analyst outlines the evolution of the clothing retailing in the UK with focus on the business issues and innovation. As per the report of IBIS World, the market has faced various challenges, including a decline at a 2 to 3% market size in 2024 with the evolution of the fashion trends and shifts in the consumer preferences, the use of a various graphs and statistical analysis along with the business metrics leads to efficient understanding of the position and the growth in the UK clothing retail market. And the second slide, data set and procedure. In this slide, I'm discussing about the data set used for my analysis of the market position along with the selected companies and the business metrics. The five selected companies are Madeline, H&M, Frasers Group, Ted Baker, and Next PLC from clothing retail in the UK. The high profit growth with increased employment levels leads to the selection of the companies. Moreover, six business metrics are selected out of which three are managed metrics such as creditors payment, number of employees, and the liquidity ratio. In this, the business and managed metrics led to effective monitoring of the business with the data compiled using FAME and IBS World during the 10th year period and provided that are provided in an Excel workbook. The next slide is trend analysis over time. In this slide, showcase the trend over a 10-year period 2000 from 2015 to 2024 for the five selected companies based on metrics that are developed in net profit and creditors payment. The trend analysis highlights that there are notable differences in profitability, stability, and financial discipline over the years. For instance, Madeline in its net profit showcases volatility with recurring losses and operational efficiency leading to losses for the companies. Contrarily, H&M demonstrates a consistency in profit trends, indicating efficient cost management and a relatively low creditors payment with effective cash flow for the company. Further, Ted Baker experienced notable perks in 2020 for creditor payment trends reflecting the pandemic-related liquidity, the constraints with the gradual improvement over the years. And the trend comparison reveals the H&M and Ted Baker experienced steady rise in with short and stable creditor payment periods in the long term. The next slide, intercompany comparison. The intercompany comparison for the business metrics liquidity ratio and return on total assets over the period 2015 to 2024. The comparative analysis highlights distinct financial ineffectiveness for the companies. For instance, H&M maintains a consistent liquidity ratio reflecting stable operational cash flow, but Ted Baker, due to inconsistency in cash flow management, led to volatility in its liquidity position. Moreover, the return on total asset and the levels for the Next PLC outperform its competitors, exhibiting strong asset utilization and efficiency in the generation of the profitable returns. The combined analysis for the company suggests that our profitability is concentrated while liquidity management varies due to the operations and asset utilization. The higher liquidity stability with stronger asset returns as observed for the Next PLC and Fraser Groups leads to increased profits and growth for the retail sector in the long term. Then next slide is visual dashboard. In this visual dashboard, that an effective business dashboard depends on the well-chosen chart types and visualization for the comparison of the trend that are effective tracking of performance across companies. The use of bar charts serves as the most effective tool for comparison of time-based performance metrics such as liquidity ratios or return of total assets. For instance, the UK premium lifestyle clothing market estimates an upward rise in the CAGR by 13.8% with the new operating mix and a more realistic size in the segment. The area charts visually describe the pattern and the trends across the companies during a long-term profit within the segment. The use of charts and the data visualization led to identification the effective pricing strategies and cost management methods that led to increased total profits and supply chain optimization across the clothing retail sector. In this, the raw data into meaningful insights for effective decision making across firms. The next is descriptive analysis. This is I am highlighting the summary statistics for the various business metrics with the relationship between the added descriptive statistics highlight that a sample size of 50 leads to significant variation in creditors payment along with the substantial delay in the long term. Contrarily, liquidity ratio through moderate standard deviation and mean defines significant. The overall mean in relation to the sum of the motion, median and the standard deviation reflect that are increased in interpretability through assessing the volatility and risk dimensions and the rising liquidity ratio also. The descriptive statistics led to more robust the measures of the diverse efficiency levels in the asset utilization. And then next is correlation analysis. In this, the correlation analysis among various business metrics with influence of interrelationships on the managerial decision making. The creditor's payment period showcases a negative relationship with various other variables indicating that firms take longer to pay the creditors with relatively weaker liquidity platforms. On the contrary, the number of employees that are exhibits a moderately positive correlation with the operational efficiency and the effective asset utilization. The strongest positive correlation of net profit with the return on total assets that are leads to generation of income and effective pricing strategies within the sector. The positive relationship between the various variables leads to the effective managerial decision making through improved profit growth in the firms that are significantly effectively decision making and the optimal utilization of assets. The predictive analysis leads to profitably and efficiency being closely aligned with the moderate financial stability, scoring the importance of operational proficiency in the long run. The next is regression model. In this table that I analyzed the regression model with the dependent variable as a gross margin and the independent variables being the chosen managed metrics. The R squared value of 0.355 indicates a lower complexity within the model with the gross margin increasing as a result of strong liquidity position within the market. Moreover, the significance of the p-value of 0.00 highlights that the regression model is highly significant with the profit margins driving asset efficiency and employment their levels into the retail market. The predictivity of the reliability of the model is the moderate with the depth structure and the cost efficiency providing valuable insights into the improving gross margins and bringing retail industry. The statistically significant regression analysis implies asset productivity with the timely meeting of short-term obligation during the driving the profit margins higher. And the next one is recommendations. In this slide, the two key decisions that the managers might undertake to overcome the business issues and significantly led to the growth in the retail clothing sector. The first decision being the adopt an effective pricing strategy in the profits along with the optimized supply chain across the sectors. The second decision focused on the balanced liquidity policy that leads to maintenance of sufficient cash reserves for operational flexibility with the building of credit reputation for the firms. The managers, through focus on both profitability and financial efficiency, leads to the long-term growth in essence, the productivity and the building of a disciplined capital management system in the business environment. And the last is conclusion. In this part that I am concluding the presentation by demonstrating the statistical and comparative analysis for the 5 chosen companies in the sector that are led to providing the valuable insights, the predictive analysis and summary statistics which showcase that gross margin has emerged as an influential business metric driving profitability and asset efficiency in the retail clothing industry with the management of the liquidity position. The graphical trend analysis in this and the intercompany comparison outline the Next PLC and the Frasers Group are more financially stable than its peers during the 10-year period due to strategic operational efficiency, thus the decision making with the focus on effective pricing strategies that are and the liquidity position led to long-term sustainable growth of the UK clothing in the market. And here are the references that I took for my presentation. And thank you very much.